Good morning, ladies and gentlemen, and welcome to the Seed Innovations Limited Annual General Meeting proceedings. Throughout this presentation, attendees will be in listen-only mode. Questions are encouraged. You can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. I'd now like to hand you over to Ian Burns, Chairman of Seed Innovations Limited. Good morning.
Good morning to everybody on the call today. This is the first time that we've been able to do the AGM virtually. We changed our articles to enable us to do that, and it's really great to have so many people dialing in today to take part in it. I think it's a really positive step on behalf of the company and the Guernsey Company Law to allow this to happen. The call today is going to fall, I think, broadly into three segments. The first segment will be dealing with the formality of the annual general meeting itself, which we'll do shortly. Then we're going to move on to a more detailed investor presentation, which Ed will lead. And then after that, we'll have some time for questions. And we appreciate particularly the people who have submitted questions in advance. But as you heard, there is an opportunity to ask other questions during the course of this call. So without taking up too much time, I'll move over to deal with the formal part of the annual general meeting, which is due to be held at 10:30, which is now. We've received proxies for all of the votes, and I'll run through those now. So item number one is an ordinary resolution to receive and, if thought fit, to accept the reports of the directors and auditors and the audited financial statements for the year ended the 31st of March 2021. The voting is now coming up on the screen, and it shows that we had almost total unanimity. Almost 100% of the people voted in favour of that resolution. So I declare that resolution passed. Resolution 2, that the company be and is authorised, generally and unconditionally authorised in accordance with the company's law, to make market purchases as defined by the law and to cancel its ordinary shares. The maximum number at which we can purchase being 31.8 million, the minimum price at which is £1, 1 pence, I should say. The maximum price is any amount equal to 115% of the average middle market quotations for the ordinary shares. The authority will expire on the next annual general meeting of the company, and the company may make a contract to purchase ordinary shares under the authority hereby conferred, etc. And again, the voting is the same as the previous resolution, so that resolution is also passed. Resolution 3 is to reappoint Grant Thornton, Channel Islands, as our auditors, and for the directors to agree their remuneration. And again, the resolution was passed with similar to the previous two resolutions, with only 150,000 votes to be withheld. Resolution 4 is in fact to reappoint me as a director of the company. Directors are re-elected on a rotational basis, and I'm very pleased to say that with the exception of 771,000 votes withheld and 20,000 against, I was reappointed as a director, or I've been voted to be reappointed. So thank you very much to those of you who voted. And the final item, which is defined as a special resolution, which requires a higher majority to pass of the people who vote, is to give us the ability to issue equity securities over the next year. And you've got details of the full resolution. I don't propose to read the full detail of the resolution. And again, Sue, if you could put up the votes, you will see that just over 97% of the people who voted in favour of that resolution. So that, I think, unless anybody, the directors have got any other comments, brings to an end the formal part of the AGM.
Thank
you. So moving fairly promptly on, I'd hand over to Ed to lead the next section of the meeting.
Thank you very much, Ian, and thank you to all those who are attending. I will take myself off screen while we do the presentation, and then we will come back on at the point of Q&A. So bear with me. I'll get the full screen up. So, Seed Innovations. As many of you will be familiar with Fast Forward Innovations, which was our former name. Obviously, it's exactly the same company. We have simply rebranded to something that we feel is more in keeping with what we are doing and what we are trying to achieve. On slide 10 here, you'll see a disclaimer. I will not read through all of that, as it'll take a long, long time, and you can read it in your own time. So going into the overview of the company, it's very important that we stress the fact that we are doubly regulated. We're regulated by being an AIM-listed company, but we're also regulated by the Guernsey Financial Services Commission. Historically, the company has had some investors and directors who held big positions in the company and largely controlled the direction of the company. I'm pleased to report that our corporate governance is in its most robust form it's ever been, and all of our investments are made by investment decisions are made by committee. In terms of what we're trying to achieve, and I think we're largely getting into the position of achieving it, we are looking to have a balanced portfolio where we have early stage VC type opportunities along with pre-IPO, and then of course companies that we've either brought through to a quoted position, or in very few cases where we've actually bought a quoted company because we see a very, very undervalued situation and something where we feel we can add value to it by becoming a meaningful investor. Little Green Pharma is a good example of that. So our portfolio, as has been communicated to investors on numerous occasions now, is geared very much more towards the cannabinoid wellness and, of course, medical cannabis sector. And at the moment, we believe that we've created a portfolio that covers the entire supply chain and all the verticals that we can effectively legally invest in. I believe we bring a great deal of experience, as has been demonstrated by our involvement in companies such as Nuvera, EMAC, and more recently, Yuma. But we've also started to bring on expertise in areas where we felt that we were potentially weak, hence the addition of Alfredo Pascal, who you'll hear from later. Moving on to some of the key data points. Obviously, although our net asset value is growing and there is a big disconnect between the current share price and that net asset value, it's very disappointing that our share price is not ticking up nicely. On the flip side, you can see that over 30% of the company is held by shareholders who have 3% or more of the company, and there's probably about another 25% of the shareholders that we know very well and hold anything between 1 and close to 3%. Obviously, what we would like to do is start to bring in some or recalibrate some of that invested capital and make sure that we have some bigger investors, potentially someone who might be 10, 20%, for example. I think that's very much what the company would benefit from now. We've obviously had some selling of late, which we obviously work very hard to try and keep on top of our share register, and we will continue to be doing that. We're very fortunate with our team to have a wealth of experience across finance, structuring, regulatory experience, PE and VC experience, and also a history of people who've worked in operations and know how a business should be run on the ground. That is something that we feel makes us very attractive to potential investee companies. They don't just want our money, they want what we can bring to the table in terms of our experience and our black books, for want of a better term. Going through the board, there'll be points later on where individuals, Lance and Alfredo, will both be involved in the presentation. And of course, you've already heard from Ian. Luke Cairns, who's our independent non-executive, has a great deal of experience, previously worked for as a nominated advisor, so is extremely helpful in how we structure our deals, making sure that it's appropriate and it works within the confines of what our regulator expects. Moving on to our investment approach, to many growth companies are seen as extremely, we are seen as an extremely desirable investor, and that is becoming more and more clear. We're getting a huge amount of deal flow. We're working extremely hard to get through that deal flow, and thankfully we've got lots of people who are within our network that we can reach out to and get answers where we aren't able to answer it ourselves. But certainly where it comes to the cannabis sector and more generally the life sciences sector, we're in a very good position where we have enough experience that we can largely deal with those opportunities. But again, just to stress, we're not interested in simply being a passive investor. Historically, we've made mistakes by being just a passive investor, and certainly where it comes to meaningful amounts of capital, we will always try and have a significant position within the company, at the very least on a supervisory board, but more often than not, I expect us to have really almost day-to-day involvement in the way that the companies are managed, the way that the money is spent, and the way that we try and utilize the experience and ability that we have. I have to assume that most people on the call as investors will have a fairly good understanding of the companies that we are invested in. So you'll forgive me if I'm not going to go through each company in a huge amount of detail, but I will obviously be doing an overview of each one, but a short one, I'm afraid. At the moment, the balance of the fund now is moving towards cannabis, which is what we've telegraphed to the market. We still have two life sciences and biotech companies in the form of Juvenescence and Portage, and then technology and fintech, Inventium, which is the company that recently took over Factum, Leap Gaming, which is our largest single asset, both by percentage held and also its implications for our net asset value, and then Vimo Education, which is a somewhat smaller legacy asset. I think our goal is to be sort of 80% cannabis by the time 2022 ends, and I think that's an area where we have demonstrated and believe that we can generate the most amount of capital returns for our investors. So moving on to the individual companies themselves, I'll start with Portage. Portage, many will know, we recently sold a third of our remaining position at north of $40 a share. We saw that Portage was spiking up nicely on its way onto its NASDAQ uplisting. And while we hoped that there was going to be a significant uplist, it seemed that much of that move had been priced in. So we took the opportunity to sell some shares above the $40 mark. You would be well within your reason to ask why we didn't buy back shares now that share price has come off significantly. And I think there's probably three key reasons why. Number one, our shareholders can go and directly buy Portage should they wish to. We don't have any real influence of the company whatsoever. It's not. We're a very, very small shareholder, and we have almost no influence whatsoever. And it is an area that the risk to some degree increases more as these drugs develop. Now, we're very happy to sit on the shareholding that we do have, but it is very nice to have a liquid position, and we will obviously decide nearer the time if that share price starts to move up, whether or not we exit more of that position. But right now, we're very happy shareholders of Portage. Yuma Wellness, is doing good things. It's doing exactly what's required in the over-the-counter CBD wellness sector. It's effectively consolidating what is a very, very fragmented sector with companies in many cases that are very underfunded. Companies in some cases have done quite well, but at this point they are still largely not profitable. And the team behind Yuma is obviously a very experienced team. You'll remember Lorne Aberney, former CEO, also CEO and chair, I believe, of Nuvera, and of course chairman of EMAC. So has a very good deal of form in the cannabis sector, and this, if you like, is his third go at that sector. Jordan Greenberg, who's also the CEO of the company, was also very involved as a co-founder of Nuvera. So it's a really good team with form, and they're proven in cannabis. They have a very, very, very good network, and I believe what they're doing is absolutely the right thing in the sector, and it's a company we look forward to supporting more. As telegraphed by Yuma themselves, they're looking for an uplisting onto the main board LSE towards the end of this year or early next year, but sensibly they've decided to use Aquis as a platform to do a number of acquisitions as part of their buy and build strategy. But I expect that it won't be too long before we're looking at a LSE listing. Moving on to Little Green Pharma, this is one of the few companies that we've invested in, although it's already a listed company and largely anyone can go and buy the shares of Little Green Pharma. We felt that by having a meaningful position in Little Green Pharma, which is a company that currently is absolutely nailing its investment strategy, they're working in probably the most professional manner I've seen within the sector myself. Alfredo will also give some color on the company later on, but a few key facts that I think are really useful and should be taken on board. Their patient numbers increased from 4,500 to 15,000 at the end of the reporting period. This is pretty significant. I think to put it in the context of the UK market as a total is around about 10,000. So that's just Little Green Pharma's position in the Australian market. And so much demand that has come their way, they actually needed to buy another facility in order to supply that demand, but also give them a better platform in Europe, and hence the Danish facility that was bought largely for cents in the dollar. It's a really gold-plated facility that had a huge amount of money spent on it and had all the ability to get products into Germany and, of course, Australia. And so far, we've already seen that facility doing what it was meant to do with the first product shipped to Australia. So we're feeling very, very bullish about Little Green Pharma. It's very, very undervalued in our opinion, based on the fact that Australia has not really embraced the cannabis stocks as much as I think probably Australians hoped. So I think it's very possible that you're going to see a European listing potentially here in the UK on the LSE again. And I think that will really supercharge the value of Little Green Pharma as people start to realize. But as I said, I think it's one of the most well-run companies in the sector. Moving on to two of our portfolio assets that are both also in the CBD wellness over-the-counter market. You have Scitec, which is largely an Israeli company with operations and distribution into multiple territories. The interesting thing about Scitec is it also is looking very heavily at the medical cannabis sector itself and has opportunities in Brazil and other territories. But right now we view it very much as a over-the-counter CBD wellness product business that has actually done very, very well. They've done a hell of a lot from a very small base. Now they're looking at a reverse takeover with Fragrant Prosperity, which is an LSE listed company. We've taken a small position in Scitec, and we may take more of a position upon the RTO, but that is yet to be determined. Southwest Brands is our brand play. Most of the other companies have some sort of vertical integration. In the case of Southwest Brands, it is absolutely a brand play, and it has form with people behind it who have a lot of experience in working with big household name brands, and they understand how to build a over-the-counter product business where fast-moving consumer goods plays need brand behind them in order to get the equity that's required for them to go and sell lots of product and have a big audience. So far, we've seen some very interesting stuff from their initial launches. Certainly in the first 48 hours of one of the two brands that they've launched, they had more than 1.4 million hashtags imprints on their one product, which I think is very impressive. And I think we look forward to hearing more about Southwest Brands. I can't say a great deal because they are looking at an IPO, and that will all come to fruition, we hope, over the next 4 weeks. Moving on to Leap Gaming, which, as I mentioned, and as you will all know, is our largest single asset. It's our biggest holding by percentage and also by our audited net asset value. As has previously been discussed, Leap is looking to IPO here in the UK. It is very much into that process. There have been some small delays, not really to do with Leap itself. I think it's been a very, very busy period with advisors, a huge amount of IPOs, a huge amount of activity in the market, and we have done some restructuring work within Leap. It has a number of different companies within the group, which is obviously in multiple different jurisdictions, so there has been a lot of work to do, but I'm still very, very confident that we'll be looking at a listed company over the next, potentially even this year, but realistically, I think to manage expectations, we should probably consider early 2022 as a possible long stop date on that. But I'm very, very pleased with the progress of Leap. I think Yariv is doing a very good job. He's got a good team, and they're in a sector that's very, very hot indeed. IMG, as many people will know, is a very large shareholder, and it's a very, very important asset to them. It's not just a investment for them. More than anything, they are partnered with Leap in a lot of the work that they're doing, and I think it's going to be this company is going to go down very, very well, in my opinion, on the London Stock Exchange. I think it's going to have a huge amount of support, and I think there's a number of other things that will help us very much. So it's going to be very, very tightly held. The company at this point in time has all very well-known shareholders, and of course those shareholders will be in for at least a year or two once the company is floated. But as I said, I cannot say a great deal more because it's planning on that listing, but there'll be a lot of information available to look at as the company moves towards listing. Juvenescence, one of Jim Mellon's companies. Sorry, I'm getting internal messages. Juvenescence, one of Jim Mellon's companies, as he has recently telegraphed and has been written up, I believe the company is looking at a float still, and there is a potential that it will happen this year. As far as we understand it, it's a company that, again, we don't have a huge amount of influence on. It is doing all the right things. They're selling products, and they continue to be able to raise money. So we hope that a listing comes to fruition this year or early next year. Moving on to Eurox, which is one of our larger investments in the cannabis space. We are extremely happy with the progress so far. We recently invested 3 million euros. Germany, as many of you will know, is the largest medical cannabis market in Europe and potentially globally. And Eurox is very much fitting the role of local champion with its made in Germany full spectrum cannabis products. One of the key items in Germany is a product called dronabinol, which is effectively a THC isolate. It's approximately 30% of all the prescriptions in Germany. It's obviously a insurance-backed market in Germany, hence it continues to thrive and become a bigger and bigger market. But ultimately, we're very pleased with what's happening with Eurox, and so far they've exceeded our expectations. They obviously also have Portuguese production, so low-cost cultivation in Southern Europe is critical if you're going to be in cultivation. And they also have ownership of a UK clinic, so they've got a very good setup for market entry here in the UK, which is in my opinion, the second biggest and most important market in the medical cannabis space in Europe currently. So, as I said, very, very pleased. We're working very closely with the management. And so far, as I said, I'm happy to report that they're exceeding expectations. You're going to hear a little bit more about them and the general themes of the German market from Alfredo shortly. But I'll quickly move on to Northern Leaf. Northern Leaf is Jersey's first licensed producer and one of the first licensed producers since GW Pharma's back in 1998. Again, this was a £600,000 investment from us with a view that Northern Leaf would be progressing probably quite swiftly towards some form of listing, and I suspect that will be happening in 2022. The company is very, very well funded, so we do not expect there to be any additional fundraising going on anytime soon, and I suspect the next time that company goes anywhere near a fundraise, if it needs to at all, will be at an IPO. Again, very pleased with what's happening so far. There's been a huge amount of customer engagement. We have been relatively involved with Northern Leaf. We haven't actually taken a board position at this point in time, but we're very close to the company and the other shareholders of Northern Leaf. So expect, hopefully, we will see a listing in, I suspect, the first half of 2022. But that remains to be telegraphed properly. The reason we've called Vimo and Inventium non-core investments is largely because of their size. As I will cover, obviously, the situation with Factum when we get to Inventium. But Vimo is a fairly small holding for us. It's in educational technology. Again, it's an area where we don't actually have any involvement with the company directly. We speak to them quite frequently, but in terms of their actual business model and what they do, there's very little that we can help with and add any value to. So for us, it's a non-core investment. It's a very small percentage of our net asset value. Moving on to Inventium, obviously, it's hard to put the Factum situation down to anything other than crushing disappointment. It was a poorly executed business with a very promising product, but ultimately the team did not execute that very well at all. And it's certainly something that we as a fund have learned from. And in our new guise, we will not be making mistakes where we do not have an active controlling interest and making sure that we as individuals are heavily involved in the management of the company and the way that the money is spent. Inventium does provide a ray of hope for our now very much more reduced investment value. But again, it is non-core and not something that we feel that we can add any value to. And it's certainly something that at this point in time, we wouldn't be looking at increasing our investment size. But the business model of Inventium is quite interesting. I won't spend a huge amount of time on it, but something we can always cover later. And if people want to, they can reach out, and we'll obviously put them in touch. At this point, I think I will hand over to Lance, who can cover some of the financials.
Thanks for that, Ed. So I'll keep this fairly brief. Certainly the slides are of March 21, so they're slightly stale now, and by their very nature, sort of net asset valuations are backwards looking anyway. We will have an updated NAV in our interim statements till 30th September, which we expect to publish in early December, and this will also include our newer investments as well. When we met last time, when we presented last time in March of this year, we talked about costs, and we talked about the fact that we were looking to bring costs below 5%. I'm happy to report that this has been achieved for the year ended 31st of March 21. The effective cost rate was about 3.35%, as we showed in the key information document on the website, and those costs equated to roughly 70,000 per month. In the period since then, we've increased our staff costs slightly with the addition of Alfredo to the team,
but also made some savings with a change of auditors to Grant Thornton, as we spoke about earlier. And we also expect some other savings with changes to other service providers, some of which is underway currently. We've had some one-off expenditure around the rebranding, but this will be kept to a minimum, and I don't expect this is going to affect significantly over the full year. Going forwards, and excluding those sort of exceptional costs, we're budgeting a continued cost rate of about 70,000 per month before deal expenses, and we expect to maintain a similar overhead percentage in the future, so below that 5% continuing. Our fixed costs are about 65,000 a month, split about 60% staff costs, 40% advisors and other overheads. And those advisor costs are somewhat mandatory given our AIM listing and our regulation here in Guernsey. I can see questions coming in about the liquidity position, and I'm happy to be able to tell you that we've got around 2 million in cash currently, though that being remaining from the proceeds of raises that we've held and the sale of EMAC earlier in this year. We expect about half of this to be redeployed into new investments before the end of the year. And of course, in addition to that cash, we've got liquid or semi-liquid positions in Portage, Little Green Pharma and Yuma, which total roughly 5.5 million. Moving on to think about asset allocation. As announced when we amended our investment policy last year, and following on from Ed's comments earlier, we've been refocusing the portfolio towards medicinal cannabis and wellness. And I'm pleased to tell you that as we stand today, we've got approximately 36% of the NAV in cannabis and CBD investments. We've got another 13% in non-cannabinoid wellness, so a total of close to half in that cannabis and wellness space now. We've got 42% remaining in those legacy tech investments, so the Leaps and Vimos and now Inventium, and the balance is held in cash. We've also spoken about a move to a mix of long-term hold, pre-IPO and listed investments, and that split is currently about 1/3 in listed investments in cash and about 2/3 in those less liquid investments. But of course, we expect some moves towards liquidity with IPOs and other similar events. Looking at those listed investments and starting with Portage, as Ed's discussed, we currently hold 50,000 shares roughly in Portage. The cost price against those is $10. And as we reported, and as Ed mentioned earlier, in June, we actually managed to sell some of that above $40. So realized a £400,000 profit roughly on that. The current price on Portage is around the $20. It's down from $28 back in March. So if we looked on a like-for-like basis, that holding is probably about £220,000 less than it was. And the positive side of things here, I've seen that B. Riley have set a target price for Portage of $40 earlier this month. And actually, I saw yesterday that Oppenheim had also set a target around 30 and that actually labelled Portage as an outperformer. So positives on that one as well. Yuma, less liquidity than for the others by virtue of the markets it's on at the moment. The current price that we're seeing on both the CSE and Aquis is around our cost. But what was really heartening was to see that the big Swig acquisition that was announced this week sees shares issued at a premium to that market price. We view this as a hold currently, as Ed was talking about, lots of work to be done and being done on there. And we certainly expect improved liquidity as Yuma sort of moves from the markets it's on now onto a market with more liquidity, be that the main market or be that the AIM market here in the UK. Last up on the listeds is Little Green Pharma. As we stand at the moment, current price is flat compared to our cost. It's around the 70 cents. It's traded much better earlier in the year. I think the year-to-date high was 93 cents and the 52-week high is just over $1. Lots of good news currently, and we certainly feel that this is an undervalued stock on the Australian market at the moment. We've got a bullish view of the management team and the prospects, as Ed has spoken about, and certainly for us, we continue to view this as a hold. I think that's about it from me, so I shall pass back to Ed and Alfredo to talk more about potential investments and the market development. Thank you.
Thank you very much, Lance. And again, I want to take this opportunity to thank the board and Alfredo for all their hard work lately. There's been a huge amount going on, and yeah, we feel very, very bullish about what we're doing, and the hard work will pay off. So going into potential investments, we're obviously looking at a huge number of different products within the different supply chain verticals. And, you know, at the moment we have a number of different projects that are very exciting. But again, these things, we do take a lot more time and do a huge amount more due diligence than perhaps has been done historically with the fund. Again, it's all about what you buy assets for. That really dictates how well you're going to do out of these assets. We don't want to pay retail. You know, we're not going to pay the same as a sort of friends and family round that were done by a company at a you know, big valuation, because their friends and family believe in them. We believe that we bring a huge amount to the table in terms of our abilities, contacts, etc., as I previously mentioned. So, you know, we see a lot of stuff that's probably a bit too overvalued for us, and we don't see the potential to make great returns out of it. So sadly, there are some businesses that we miss, but ultimately we're here to make sure that we get the best returns possible. Again, having that balance to our portfolio is critical. When something goes towards a listing and becomes potentially liquid for us, we need to start thinking about where are we going to make big returns by investing again in the early stage, or potentially something that's very strong as a mid-stage company. Trending markets, again, many of you will be familiar with some of these numbers. They're available from multiple different sources, and of course you'll see lots of very, very big numbers from many different analysts. What we try to do is take a somewhat more conservative view, just to make sure that because obviously we're on the ground seeing what is happening with companies and the rate at which they're growing. Some companies and some territories are growing extremely quickly, and others that were potentially going to be big markets have taken a little bit longer to move as expected. So, but certainly we're very bullish about a number of different markets that our asset base is covering. And remember, these companies in many cases have some form of vertical integration, or are dealing with a very specific part of the supply chain that we find very interesting. So we have really tailor-made our portfolio rather than just take we want to be thematic about it. I'll hand over to Alfredo at this point.
Thank you, Ed. Alfredo here. Yeah, so I would emphasize what Ed just said. I guess it's unsurprising to anyone when we say that the medical cannabis industry and other industries where we have portfolio companies are expected to grow rapidly during the next 5 or 10 years. However, the key message that we want to transmit is that we are not simply doing thematic investing just because an industry is expected to be big in the future. We are investing in cannabis, for example, because we understand how these markets have been evolving in the past few years. And it is our expertise in the sector what allows us to find the specific companies that we consider are probably going to succeed in these growing markets. And to exemplify how important it is for us to make decisions based not only on these 10-year projections, but also because we know how the markets are evolving. Here we're showing some market size data of 3 of, in my view, 4 of the most meaningful medical cannabis markets outside North America, which include Germany, Israel, and Australia, as well as the UK, which we didn't list in the slide, but which has also been growing rapidly in the past couple of years. So in the case of Israel, the link provided in the slide is of the Ministry of Health, where you could see the cumulative number of authorized patients over time. And the key takeaway in the case of Israel is that as of July this year, there were almost 100,000 authorized patients. And these patients could buy combined a total of up to 3,685 kilograms of flower and oil, cannabis flower and oil per month. And the other thing of Israel is that despite the large number of patients, other markets, for instance, Germany, may be more attractive for some companies because Israel, unlike Germany, has some very big local cultivation, which may drive prices down there. In recent months, monthly sales in Israel exceeded the equivalent of about 11 million pounds per month. And this year, the market should exceed 130 million pounds in sales, which is double-digit growth from last year. And this is the important thing, how it is growing. In the case of Australia, the Therapeutic Goods Administration website shows the monthly new approved patients over the last 12 months. And the historical numbers, again, show strong growth there. Like in Israel, the cumulative number of authorized patients exceeded the 100,000 mark. And also, like in Israel, in Australia, there's some meaningful local production, which again could mean somewhat lower margins than in Germany, and that may be the reason why some Australian companies not only want to sell in Australia but also export to Germany, and that is the case of our portfolio company, Little Green Pharma. In terms of market size in Australia and how it has been growing, medical cannabis revenue is expected to exceed expectations in 2021. It should surpass about 100 million pounds in sales, and that is double the 2020 amount. And this was also one of the drivers, I would say, behind Little Green Pharma's acquisition in Denmark, which was to be able to ship product ready in Denmark to Australia, where particularly flower sales have been growing rapidly these past 12 months. And lastly, Germany, which is the largest European medical cannabis market, as Ed mentioned. I think one of the best ways to see the growth of the German medical cannabis market is by going to the official link that we have there, which shows how flower imports have been growing since 2017, with almost 9,500 kilograms imported in 2021. So that's about 8 times the amount imported in 2017, which was when the current medical program started. And this is only showing flower because data for other products such as full spectrum extracts or dronabinol isn't readily available. In the case of Germany, there's very limited domestic cultivation, extremely limited as of now. And in terms of local manufacturing, again, there are very few companies doing that. And we are pleased to have invested in one of the, to our knowledge, only 2 companies that is manufacturing extracts in Germany, which we see as a key advantage. A little bit more about Germany that I think is important is that a key thing about the German market is reimbursement within the public health system, which is not so common, particularly not in other countries. So this totaled in pounds about 140 million in 2020. And in Q1 2021, which is the last quarter for which we have official information, reimbursement was of almost 40 million pounds that quarter. And this includes only what is reimbursed within the public health system. If we include so-called private sales, this is of patients that pay out of pocket, which is a meaningful amount as well. The total market in 2020 was probably close to about 200 million pounds, and we expect it to grow to 250 million pounds this year. So again, double-digit growth year after year. So with this, Ed, I hand it over to you again.
Thanks, Alfredo. Moving on into our final few slides, I think if we look at the investment case for Seed Innovations, I believe we're in the strongest position we've been in for years. Clearly, our asset base, our portfolio is in a really strong position. We've got rid of some of the things that were, to some degree, dragging us down, whether we liked it or not. But we're really now in a position where we have, other than legacy assets, we have really picked the businesses that we wanted to invest in, and we believe will be the best producers of return for our investors. Our stock price can move very, very rapidly. It wasn't that long ago in March where the share price was at 15.5p, which I still was somewhat disappointed with, but more disappointing is the fact that we were not able to hang on to that growth. But I believe it's very simple. The growth of our assets organically will see a marked improvement in our net asset value, and I believe that is going to start showing through in our share price. We've put a lot of work into some of these companies, particularly the legacy assets that needed, to be honest, quite a lot of work. But those assets now are in the best place that they've ever been, and I think that they are going to give us a material change to the value of our fund. The share price, I believe, will follow. I genuinely believe if you build it, they will come, and I think we're now really moving towards that. Again, we've got a huge amount of experience in the team. We know what we're looking for. We know the themes that are going to move quickly, certainly in the cannabinoid sector and life sciences. And we're a desirable investor for those people, so it means that we have some clout. We're not necessarily coming in on the same level as some smaller investors, for example, and we intend to use that to our advantage, and more importantly, your advantage. A couple of case studies towards the end here, and I think it's something that's really important. Having been around the junior markets now for over 20 years, it's very, very rare that companies, certainly sub 20 or sub 30 million pound market caps, actually generate and deliver cash returns on the assets that they invest in. So I think that's something we do have to point out. We've demonstrated a number of times that we can do that, and we think that we have a portfolio right now that is capable of delivering, at least these sort of numbers or more. Obviously, it's going to take it takes a lot of time. It takes time. It takes hard work, but certainly we, the board and I, are committed to making sure that happens. And certainly we hope that by our next AGM, we're able to be sitting here talking about the exceptional growth in net asset value and hopefully share price also. But rest assured, we are working extremely hard to deliver for our investors. And at that point, I will hand back to Ian.
Yep, I've got it. Thank you very much, guys, everybody that's contributed. We've had a series of questions come in. Some of which you guys have been putting them out, and some of the questions, thank you very much to those of you who sent questions ahead of the meeting. I've kind of grouped some of them together because there was common themes across the questions, and so I'm going to fire these out to various people. The best person I think is right to answer them, and I think we'll probably start with Leap. And probably over to you, Ed. Lots of questions around Leap. Why was what's happening with the IPO? When's it going to happen? What's the revenue numbers? All those kind of questions that have come up in relation to Leap. And I'm conscious that you can't answer everything because some of it is market sensitive. But do you want to say anything more than you've said so far about Leap, or can you give people a little bit more colour?
Yeah, absolutely. Look, I'll try. As you correctly identified, it's not necessarily easy to talk about exactly some of the more numerical side of Leap, and there's a number of reasons for this. I've mentioned that IMG are an extremely important investor, but partner for Leap, and of course, we also have to respect what they're doing with the IMG arena, for example, and all the products that are being built around that. But ultimately, Leap is a multi-jurisdictional company. It's quite complex. Obviously, we've been pointed to the fact that people have got hold of bits of the company's financials, which, taken in isolation, aren't necessarily that helpful. But of course, I can't discuss the ins and outs of the financials of the total group. Needless to say, there's a huge amount of interest in Leap. We are moving forward towards an IPO. It's not always as simple as just taking a company to an IPO. You have to structure these things. It's something that we've done for many, many years. And in the case of Leap, there's been work to do to make sure that the company is ready for an IPO. I'm not going to rush an IPO just for the sake of doing an IPO. I want us to get the absolute best value for this company. The multiples paid for gaming companies right now are really impressive. So I think, and again, please do not take this as investment advice or any kind of leading statement, but the ambition for Leap is significant. We're not looking to have a small listed company here. They have very, very big ambitions. The multiples paid, as I said, for revenue on gaming companies is quite high. It's quite a big spread, but even at the lower spread, we have a really meaningful business on our hands. So, I'm afraid there's not much more that I can say on that, but needless to say, I'm working extremely hard with the management. The management are also working extremely hard on the business. And, I'm really excited about getting Leap done. Believe me, I wish that it was done yesterday, but we have to do these things right. We have to do them well. And that's the way that you investors ultimately win.
Okay, thank you. Next question is probably our far out Lance, because I know you are like our point man on this, and it's relating to the takeover of Factum. And I mean, do you want to give any more detail around what happened at Factum and how we've ended up where we end up?
Yeah, I mean, thanks, Ian. Factum has been a long process, and as everyone knows, it was in Chapter 11 bankruptcy, and has finally sold its assets out of that bankruptcy to Inventium. Inventium is a privately held US company, and they are very private about their information. That's for reasons of competitive advantage, and it is their right to be so. So sadly, I can't tell you a lot about Inventium itself past what you can already see on their website, in their news releases, and that side of things. I just don't have the authority to share that. We do expect to receive those shares in Inventium in the near future. The value attributed to them will be, as we said in the RNS, roughly £250,000. And I can tell you that our holding in Inventium will be very small. We're talking below 0.5% here. So it's a tiny holding and a very small value, unfortunately. That said, and I think as said earlier, it's not a core investment for us, and we'll not be focusing on it as an investment opportunity for more funds going forwards. So I think for us, it's a hold passively. Hope to realise some value in the future as that business develops, and we wish them well.
Okay, thank you. One for you, Ed. When you did the previous presentation, you said that you had an aspiration that the market capital of the company would be 50 million by the end of this year. With our share price at around 8p, do you think this is achievable? And what would you comment about that?
Yeah, look, as for the exact timing, I don't have a crystal ball, but certainly I hoped that the market would take more seriously what we're doing. It's clear to me that there's a lot of anticipation, and to some degree people sort of waiting to see what the outcome of Leap is, almost forgetting that we have this other wealth of assets that are doing all the right things, moving forward and adding value all the time. They also forget, to some degree, in my opinion, that the audited net asset value statements are quite historic by the time they're released. And of course, these companies are moving forward all the time. We're in a growth company business. We're not, statically sitting there doing nothing. For example, with Leap, the IPO is happening, but we're also doing a huge amount of work commercially. So these things don't just sit there and wait for an IPO to happen. They continually are moving forward. I absolutely think that sort of 50 million market cap target is incredibly achievable. Whether that's by Christmas time or not, I don't see why it needs to be a long way off. I suppose if I put it another way, if someone came to me tomorrow and said, hey, I'll buy all your assets off you tomorrow, and again, I'm not the final decision maker on this, and this is dealt with by committee, just to be very clear, but certainly in my mind, if someone said, I want your whole business for 50 million right now, I would say no. So I believe that we've got an asset base that could be worth significantly more than that. But again, as for timing, I don't have a crystal ball. All I can say and all I can guarantee is that we collectively are going to work extremely hard, and our names are on the door, and ultimately that's what matters to me. We are going to deliver. Certainly, I can say we're going to deliver net asset value increases. As for the share price, I'm not the one pushing and pressing the buy or sell button. I mean, certainly if I could right now, and I'm sure we'll cover this, I would definitely be hitting the buy button. But right now, I'm precluded from dealing, as has been discussed numerous times. I'm in a position to buy. I haven't been able to, but.
And that was one of the questions that people were asking was, were you intending to buy shares and at some point during the rest of the year? So I think you probably answered that question.
Well, yeah, I mean, I can give a little bit more color on that as well. I'm very happy to. I mean, this is a fund. There's always things happening within this company. We have a number of different assets. There's a huge amount of, certainly, and me personally being very, very close to Leap, for example, I'm permanently inside. And believe me, I wish I wasn't, because on one hand, it would be lovely to go and buy shares, but on the other hand, I have a job to do, and that's the core thing. There will be an opportunity at some point, and I would love to be a shareholder, and I'm in a position where I could buy a meaningful amount of shares, and I'd very much like to when that opportunity arises. But I can't break the law, I'm afraid, and I'm not willing to under any circumstances whatsoever, and the board wouldn't let me. So.
Okay. One for you, Lance. Like a lot of investment trusts, we're now trading at a discount between the share price and the NAV. We used to trade at a premium, but we've fallen to a discount. What can we do to address that? What do you think we should be doing?
Well, I think it's as you say, it's quite normal. With listed fund companies, particularly where there's significant private assets, that they trade at discounts to NAV. And in some ways, there's not a lot you can do about that because the market doesn't have visibility of those assets. Of course, increasing that visibility is hard to do. These private companies don't want to put a lot of information out there. But what does increase that visibility massively is liquidity events. So, when we've got IPOs going on and we've got a lot of detail going out there, I think that increased information out in the marketplace will assist. And as we know, we've got a number of those that we're working on at the moment, and I'd certainly hope that will help to narrow the discount. I think the one thing that I would say to shareholders is that we've been very clear from day one that, we say in our key information document, as an example, this should be viewed, Seed should be viewed as a long-term hold. And that is for this very reason. There are going to be times where there is a lot of information out there, and that discount will narrow. We may go to premium. Certainly love to be in that situation again. There will be other times where there's less information out there, and the market may price us accordingly. Of course, as I say, our ambition is to get back to that trading at premium, to our quoted NAV, and certainly believe that's possible as the portfolio develops and liquidity events proceed.
Okay. And a kind of related question. I don't know whether Ed, you want to answer this or Lance. We were asked about shareholder engagement, and there was a comment which I'll deal with actually. Someone commented that because we'd only had 10 million votes at the AGM, that demonstrated a lack of shareholder engagement. Actually, we were patting ourselves on the back for that, because last year we had probably less than 3 million votes, and I think the year before, if I remember right, we had to ring round people because there were so few votes actually in the AGM that actually turned up. We were desperately short of a quorum. But I guess the question was about shareholder engagement. And Ed, what is your philosophy in relation to engaging with our shareholder base to keep them informed and I was going to say entertained, that's not the right word, but informed about what we're doing and how we're doing it?
Look, I think it's very important. I see a lot of companies out there and I remember I've been in this business, or should we say the small, medium cap business for a long time. I've seen everybody, every known director out there. I've seen the way that they behave. I've seen many of them effectively get barred from being directors of public companies because all they do is constantly go out and promote the same thing over and over and over again. And while I'm sure certain investors love that kind of behavior, it's just it's inappropriate. Ultimately we like to get out there and talk, and I think you'll find that actually if you look back over previous years, our investor engagement has been quite significant. Just the other one, in 1 week, I think I had 2 podcasts, various different journals, media sources had written interviews with me. We are doing it. Yes, we're not necessarily out there, promising gold every other day, because that's just, it's a short-term strategy. As Lance just recently said, it is, there's an element of long-termism in this. We're getting to a point now where investors, I understand, in many cases have been here for a long time, but we are engaging with investors, but we also have to balance that with what we can and can't say. We have a number of projects that are moving towards an IPO. We can't say anything about them, but all of that information will become very, very clear soon, because that's what happens when you go public. Information rights, you no longer have them as a private company. You have to provide information to your investors, and at that point we will absolutely be out there on our soapbox talking about these things. But in the meantime, we have to also do a lot of education to the potential market as well about the sector that we're in. Remember, it is a novel, nascent sector. So we are doing all of that. Alfredo, I don't know how many conferences he's been to. I've been presenting more often than not virtually at them. So, we're out there. We are, our name is very, very well known. But I understand that investors want to see us, doing an interview every single day. We do our best, but we also have a hell of a job to make sure that we're actually helping to move these assets in the right direction, because that's where the real value of the company is.
Oh. One question which was raised, and it's something that we sit around the boardroom table and talk about quite a lot, is distributions and buybacks. So, for instance, if we do sell something for significant cash in the future, what do we do with the cash? Would we make a distribution? Would we reinvest the capital? Or would we consider, given that we just talked about the discount between the NAV and the share price, would we consider a buyback on the shares, because that could give our shareholders reasonable value? Lance, I guess it's probably over to you to talk about that.
Yeah, thanks, Ian. I mean, yes, it's something, as you know, we talk about, but it's something that we should say to our shareholders. Yeah, it's absolutely something we are talking about. The options of a dividend or buybacks are similar in one way from the point of view they're distributing cash. They're quite different in another, in terms of how broadly that cash is distributed. If you're doing market purchases with a buyback, then really you're not engaging fairly across the shareholder base. It's much more a mechanism to support share price than it is anything else. When would we look at those distributions? I think we've been very clearly looking over the last months and years at building and refocusing our portfolio. That means making new investments. When do you then distribute? To my mind, you distribute money when you have a surplus of cash coming in, or you have shares that can be distributed in specie that we don't feel that we can reinvest in a timely manner. We view this as a capital appreciation vehicle. So if we can reinvest that money in a timely way into new investments that we believe will generate a good return, then that's what we should be doing as a fund. If we're in a situation where we've got a surplus above that, then absolutely we'll be looking at doing some distributions. If we've got stock in a listed company that we can distribute in specie, then that's something we'll look at. Does that answer?
Yeah, great, thank you. Ed, one for you, which I think you've probably answered in your presentation, but we were asked the question, are the recent investments into cannabis investments, are they growing as you expected, or you know, and I suppose an impossible question, can you put a percentage on the growth per annum? You know, what's a good number in your mind? Or do you, I mean, I'm nervous about asking that because that's a hostage to fortune that you'll get, they'll come back and haunt you. But you know, are they growing in the way that you feel it is what you expected when we looked at it initially in the business case?
Yes, absolutely. I mean, look, each company is different. There are different multiples of revenue, for example, for a CBD over-the-counter product seller versus a vertically integrated medical cannabis business. You know, the two are valued very, very differently. But on the whole, I'm very, very pleased. I think we've got companies that have a huge amount of value that hasn't been attributed. How much value, it's very hard to say. But as I've already communicated in previous presentations and podcasts and in writing, you know, we're looking to try and get more towards VC type returns. And I think the investments that we've made, we've definitely got the opportunity to make VC type returns on our money. You know, is this going to happen overnight? It may well do in some cases, but the reality is, you know, these businesses take a lot of hard work. But, you know, we've invested in them for the right reasons. We haven't just invested in them because they are the only ones available. We've trawled through, you know, hundreds and hundreds and hundreds of opportunities to reach the companies that we have. You know, yes, there are some good companies out there, but, you know, they wanted crazy valuations, which we felt would really limit our returns. So we've gone with companies that we feel, you know, understand the business. They'd much rather have us on board than not have us on board. And, you know, that's where I see us making big returns. So yeah, I'm really happy we're doing the right things. You know, only time will tell in terms of the value, but I'm pretty sure we've got a very exciting sort of 6 to 12 months ahead of us where, you know, number one, we can increase that NAV significantly. You know, sometimes we might miss the deadlines on the actual audits themselves just because of the timing. But, you know, we also will do our best to stress when a company has obviously raised money at a much higher premium, for example, than where we came in, even if it does miss the actual cutoff for those accounts. So yeah, I can't give you a number here. I think that would be, as you correctly said, a major rod for my own back. But you know, certainly we're looking for big returns on a number of these assets.
Okay. I think we've pretty much come to the end of our time. I know that there are one or two other questions, some of which are a little bit more detailed. And what we're given undertaking is if we haven't answered your question, we will try to get back to you. We will have a look at it, and you'll get a reply through the system from us. But I think we're probably going to wrap it up now after an hour or so. So I just like to thank shareholders for being supportive and also joining this meeting, which has been a first for us and slightly nerve-wracking to work with the technology, but hopefully it's worked okay. And also like to thank my board of directors and Alfredo. I hope you've got a flavour that this year, particularly over even during the lockdown period, but certainly the last 18 months, my colleagues sitting around the table, and I'm not asking for sympathy, but my colleagues around the table have worked incredibly hard evaluating investments and dealing with the company. And you may not always see it as shareholders because, unfortunately, as you probably heard over and over, it's sometimes stuff which is going in the background that we can't publish. But absolutely rest assured that these guys sitting around this table and Ed and Alfredo are actually working for your best interests and really to try and get this company to rev up and get going. So I think at that point, I'm probably going to bring the AGM and the investor presentation to a close. Fantastic. So thank you very much, everybody.
Ian, thank you very much indeed, and thank you very much to the team of Seed Innovations Limited also. And as Ian said, thank you for everyone for submitting those questions. Of course, all questions will be reviewed by the company and responses published where appropriate to do so. These will be available on the Investor Meet Company platform. If I could please ask attendees not to close this session, you'll be automatically redirected for the opportunity to provide your feedback in order that the management can better understand your views and expectations. This will only take a few moments to complete and be greatly valued by the company. On behalf of the management team of Seed Innovations Limited, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good morning.